Hello traders, this is Blake Morrow. You are listening to the week ahead video for December 13th, 2020. Hope you guys and gals are having a great weekend. Now, before I get started, I want to mention a couple of things. If you didn't get a chance to listen to Amir Shahi's interview on the F.A.C.E webinar on Friday, the 11th, make sure you go to the YouTube channel, our YouTube channel, and actually watch the F.A.C.E webinar and watch the last 30 minutes of that webinar, because then you're going to get an interview with a very important person that has been in our community for a very long time. And I think it's just worth listening to, especially if you've had a tough year. 2020 has not been easy for most people. So I think it's a great way to kind of wrap up 2020 and kick off 2021. Hear from a trader just like you, who's in the ForexAnalytix community and has been for a long time, that has gone through some tremendous life experiences. Now, I also want to mention, if you haven't tried out ForexAnalytix, if you're not part of our community, make sure you try it out. It's only $1 for 10 days. This is, by the way, let me stop here and talk about this. This is the perfect time to try out ForexAnalytix for $1. The reason why is because at the end of the year, we will be doing our annual, New Year pricing model. So therefore, you're going to get an extreme discount that only comes around a couple of times a year. You're going to get an extreme discount. So if you already tried it out and you know what you're like, man, I really enjoy their products. I want to be able to get a discount. Then you're going to be able to take the discount at the beginning of the year. So if you want to try it out, please do it. This is the perfect time. It's only $1 for 10 days. Doesn't matter if you're going to use the premium version or the light version. You're going to get the premium version while you're trying it out. Also, make sure you download the mobile app. This way you get all the alerts, all the notifications right on your phone or your tablet. If you're running around the house, you're not in front of your desktop. Very important. Okay. Let's talk about this next week and kind of what happened last week too, which is pretty important. Let me get rid of data flash here. This is one of the features that is included with ForexAnalytix. Gives you all the upcoming news releases, and then as soon as it's released, it pops up on your screen. It's really nice. It's got some audible alerts there too. Let's talk about where we're at as far as equities go, because I still think that equity markets are driving risk appetite. So therefore, we have to be respectful of that when you're talking about currencies. So this is the S&P, and this is the long-term. Remember the long-term megaphone pattern that we'd been monitoring for so many years? The fact of the matter is we're broken above that megaphone pattern. So do you know what that really means for stocks? At least at this point, unless we break down, unless you start to see a breakdown that looks like this, do you know what this means? That we're probably in a melt-up phase, which means that, over the next, several weeks, maybe going into the beginning of the year, we may continue higher towards 4,000. And, when we extend out to those levels, it's going to be probably the equivalent of a blow off top. And that could actually take us right into, the inauguration. There's levels at 3750, which if you guys use ForexAnalytix and you look at the analysis on the S&P, which, by the way, this hasn't been updated yet over the weekend because our team's working on it right now. But you'll notice that we talk about the 3750 level. We actually do it on a daily basis too, referencing that resistance up there, because it's an important 127% extension move that seems like it could get done. Now, beyond that, you could see it even takes us up towards 4,100. 4,100 if we go out and extend to the 618, 161% extension, of that post-COVID lockdown move. Guys, this is all entirely possible. But this is I have to say this while we're above 3,600. But do you know what's going to really drive this at the end of the year or going into next year? Is going to be Brexit. So let's talk a little bit about that, because you guys might have recalled from this week, we failed above 135 again, or actually it was last week, but this week we spent the week below 135. Okay, because it failed last Friday or Thursday, I want to say. And then we spent all week below 135, and now we're dipping. Now, check this out, though. There's a lot of people that don't think a Brexit deal is going to get done. I personally do. I think Bojo, the Prime Minister Boris Johnson is actually doing what he needs to do to secure a deal. This week when he said, we need to get ready for an Australian type of a breakup, and that's reference when when Australia and the UK, the breakup there, or a Canadian style. It's really referencing a deal or no deal. Will we walk away with a deal or no deal? And he basically said it could happen either way. I think the headlines took it out of context, saying get ready for an Australian style divorce, basically. But if you listen to his whole speech, which I did tweet, by the way, this week, that he says get ready for either or. But he's warning the European Union that they could very well leave. I think that a deal will get done in the 11th hour, but he's probably applying some sort of game theory to the political argument or negotiations in order to posture himself and the UK in the right light. So, with that being said, if you believe that the UK is going to put together some sort of deal with the EU by the end of the year, which I think they're gonna stretch it all the way out into the end of the year, and of course I could be wrong, but let's think about where the potential levels that you could look to buy the cable if that is truly the case. Well, my opinion is 130. Now, here's the reason why. It's the 618 retracement. You can see it right here. 618 retracement of the September, late September lows to the December highs. That'll be 130. But also, let me square that away. You'll notice that it is the 78% retracement, right, of this October 30th low to the December highs. The 78% retracement comes there, and I bet you, and I haven't even done this work yet, but let's do it. If you take this low, which is from November 13th, and you push up that level, that's 127% extension of this move. So what I'm saying here is the cable may drop down to 130, and that's probably the best area to pick up the pound from a risk reward perspective. Now, could you be wrong? Yeah, of course you could be wrong. You could end up getting long the cable, and all of a sudden, no deal, and the pound drops, 300 pips. I mean, that could definitely happen. But what could also happen is a deal gets done, and you pick up the cable around 130. And next thing you know, it's trading above 135 because the deal does get done. So, you have to think about what your risk reward is here. If you buy it at 130, your risk may be below the 200-day moving average, which is 250 odd pips. But if a deal does get done, we could very easily be trading at 140 by the end of, maybe first couple weeks of January. So, you risk 250 pips to make 1,000 pips. Those are the types of numbers that you have to think about in order to make this work. Now, I was just mentioning that I think that the S&P is in blowout, blow off top type of levels. I do. And as long as we stay above 3,600, then we are. And that means that if the market believes that the UK and EU are going to put together a deal, then there's probably no reason for stocks to go down. If stocks get below 3,600 or 3,580 here, then we have to start worrying about, some of the commodity currencies really rolling over. But for right now, you look at the Aussie, and the Aussie is well above 74 cents. And I think while it's above 74 cents, it remains bullish. The Kiwi, I mean, we're above 70 cents, and definitely while we're above 68 cents, it remains bullish. But as you guys probably know, I pointed out a counter trend move in the US dollar Mexican peso. Look, I'm playing this to the long side right now, but I don't expect to play it to the long side for that long. I picked it up as it was closer to 1995, as it was breaking out on Thursday of this last week. I still believe above 2020 is going to continue to allow for the dollar Mexican peso to squeeze. But frankly, I think that the dollar Mexican peso will probably continue lower after the squeeze is done. But as you can see, with the daily relative strength breaking out, I'm not sure if the squeeze is over yet. So let's imagine today, or this is the weekend. Over the weekend, there's been no progress with Brexit. People are now starting to get worried. Stocks get a little wheezy. You see stocks pull back a little bit. The cable might, drift down towards 131.50 or 131. Maybe if we get lucky down to 130, and people are getting nervous about Brexit, the dollar Mexican peso may actually rally and continue to squeeze here. And then as we wrap up this next week, which is really, this is the next full week of good liquidity that we're going to have in currencies before the end of the year, then, you might see the dollar Mexican peso roll over a little bit as we head into the end of the year and as Brexit deal tries to wrap up. But let's talk about some of the key events happening into this next week. And you can, if you're on ForexAnalytix, you can go to your calendar and on investing.com and scroll through and see some of these events. Really, the key events that are happening this next week are going to be on Wednesday. We have some European PMI data that's coming out, U.S. retail sales, but the most important thing is the FOMC, which, by the way, for the FOMC, we are not expecting any fireworks out of the FOMC, but that may confirm that the dollar may continue to stay weak throughout the remainder of the year. And remember, the dollar is in breakdown territory, and while the dollar is below basically 91.80, the dollar index looks like it's going lower, and we're probably going to be breaking below 90 and maybe even further, going into beginning of this next year. We also have Australian employment, New Zealand GDP Thursday morning, if you're in Australia, if you're in New Zealand. And then on Thursday, we have the Bank of England. Obviously, the Bank of England is going to have their hands tied as everybody waits on pins and needles around Brexit. Also, the Swiss National Bank is meeting. And you can talk about the Swiss for a little bit. The dollar Swiss has come out of a descending wedge, very similar to the dollar Mexican peso. We've come out of this descending wedge, which could allow for a move back up towards 89.50. But I believe while we're below, whoops, that's not what I wanted to do. Let me move that over. While we're below 90 cents and especially 89.90 would be the number in the dollar Swiss, this is probably the level that you're looking to sell for a continuation of this downtrend. Okay. Now, I want to, I always wanted to, mention something for ForexAnalytix users. If you haven't seen it yet, we added live charting to the ForexAnalytix application. But one of the tools that I wanted to talk to you guys about, and every week I wanted to give you a little tip about things you could do with ForexAnalytix. I want to talk about the risk management calculator. So let's say you were trading the dollar Mexican peso, and you're like, okay, well, I'm going to put my stops at 1970, but I entered at 1995, and my target is at 2050, and I bought $1 million in currency. Then it tells you exactly what your risk to reward is a 2.2 risk to reward, and your potential loss would have been 12 grand and your reward $27,000. And so this risk reward calculator comes in very handy for me on a daily basis. I use it all the time because I want to know exactly what my max risk is at any given moment. And so this risk management calculator, it is always processing your dollar amounts. So the dollar amounts that you see here is always going to be on the base currency. So remember that if you're trading a cross rate like let's say the Euro Canadian. So that means the profit and loss would be in euros, the base currency, the one on the left, versus in dollar amounts or whatever your denomination that you're trading. So just remember, the profit and loss is based on the base currency, but the risk reward is always going to be the proper risk reward ratio. Okay. All right, guys and gals, if you found this video to be beneficial to you, make sure you give us a thumbs up on YouTube. We all appreciate it. We're putting together these videos for you every week for years and years and years now. So make sure you give us a thumbs up and make sure you subscribe to our channel so you don't miss any of the great videos that we upload throughout the course of the week, all the awesome interviews that Dale Pinkert does throughout the course of the week. You guys don't want to miss those, especially if you're trading and you can't listen to them right at that moment in time. Also, please share this video. If you saw us on social media, share it and with other traders. It really helps us out. So guys and gals, my name is Blake Morrow. I hope you have a wonderful remainder of your of the weekend that you have. I'll see you on the F.A.C.E webinar on Monday morning, and have a great day.